Welcome to JView's platform. If you have not subscribed to this channel, kindly do so, and click on the bell notification icon to get informed when I release the next video. Let's talk about today's topic, support and resistance. Support and resistance are fundamental concepts in technical analysis and play a crucial role in making informed trading decisions in the Forex market. Understanding these concepts allows traders to identify key levels on price charts, helping them anticipate potential price movements. This comprehensive guide explores the definitions, significance, and practical applications of support and resistance in Forex trading. What are support and resistance? Support and resistance are two of the most widely used concepts in Forex trading. They are used to identify key levels where the price of a currency pair is likely to encounter resistance or support. Support is a price level where the demand for a currency pair is strong enough to prevent the price from falling further. It is often referred to as the floor of a currency pair's price chart. When the price of a currency pair reaches a support level, traders expect the price to bounce back up. Support can also be described as a price level at which a currency pair tends to stop falling and may even bounce back upward. It represents an area where buying interest is significantly strong, preventing the price from declining further. Resistance is a price level where the supply of a currency pair is strong enough to prevent the price from rising further. It is often referred to as the ceiling of a currency pair's price chart. When the price of a currency pair reaches a resistance level, traders expect the price to fall back down. Resistance can also be described as a price level at which a currency pair tends to stop rising and may reverse its direction. It signifies a point where selling interest is substantial, hindering the price from moving higher. Support and resistance levels are not exact numbers, but rather zones where the price of a currency pair is likely to encounter buying or selling pressure. Traders use various technical analysis tools to identify these levels, such as trend lines, moving averages, and Fibonacci retracements. When a support or resistance level is broken, it can become a new support or resistance level, depending on the direction of the breakout. For example, if a currency pair breaks through a resistance level, that level can become a new support level for future price movements. Identifying support and resistance. Horizontal support and resistance 1. Previous highs and lows. Identify previous price peaks, resistance, and troughs, support. These levels are often revisited and can act as significant points of interest. 2. Psychological levels. Round numbers, such as 1.1000 or 1.1200, often act as psychological support or resistance levels. Trendlines. Trendlines are a fundamental tool in technical analysis, used to identify and visualize the direction of price movements in a financial market, including Forex. They help traders recognize trends, make predictions, and make informed decisions about when to enter or exit trades. Trendlines are drawn on price charts to connect significant price points, such as lows in an uptrend or highs in a downtrend, creating a line that visually represents the trend's direction. Here are key aspects of trendlines in Forex charting. Drawing trendlines. 1. Uptrend line. Here we connect successive higher lows to form an ascending trend line, which can act as dynamic support. Connect successive higher lows on the price chart. Slopes upward, indicating an upward trend. Each time the price approaches the trend line, it tends to bounce off, reinforcing the upward trend. 2. Downtrend line. In this case, successive lower highs are connected to form a descending trend line serving as dynamic resistance. Connect successive lower highs on the price chart. Slopes downward, indicating a downward trend. Acts as resistance, with price often reversing when approaching the trend line from below. 3. Horizontal trend line. Connects price levels that are relatively flat. Represents a period of consolidation or indecision in the market. Significance of trendlines. 1. Identification of trends. Trendlines help identify the prevailing trend, whether it's upward, downward, or sideways. 2. Support and resistance. In an uptrend, the trend line often acts as dynamic support. In a downtrend, the trend line acts as dynamic resistance. 3. Trend reversals. A break below an uptrend line or above a downtrend line may signal a potential trend reversal. 4. Trend strength. The steepness of a trend line can indicate the strength of the trend. Steeper trend lines may signify a stronger trend. Drawing trend lines accurately can help to take good trading decisions in Forex market. That is all for today. If you have any question, let me know in the comment section. I wish you success in your trading. Please stay safe.